this time around?
Yeah.
You're seeing the question paper only or with your answer?
Both.
Both.
Yeah.
Okay, that's fine. That's fine. So let me scroll up. The first questions there, I think the first 6 questions we did them.
Yeah.
So I expect you to, excel in those questions. But what is important is that revision. They say Jokororo ine simba. Have you ever heard of that? But for the sake of time, I think if you found it correct, there's no need for us to spend much of our time on that point. Okay. So the first one, you did it correctly. Unfortunately, my pointer can't write on your. Doesn't give me an option to to draw anything. So I'll be marking on my question paper. All right. So this one you got it right because I can see a D there. All right. That's why. But for the purpose of the video, I think we just have to rush through the question. The process of allocation and apportionment of production overheads has been carried out for a business with the following totals calculated. So we've got production cost center A and B. All right. We are told that these costs are allocated and apportioned. All right. So 24,000, 32,000, 18,500, 18,200. The production cost centers have the following details. All right, production cost centers, number of employees in production center A, 100, center B, 150. Then number of materials requisitions, 16A, 104 in B. What is the total overhead for production cost center B after reapportionment of the sales cost center overhead? So we are told that the sales cost centers are the cost to be reapportioned to these two departments. So the question wants us to concentrate on center B. All right. So how much of the production cost center related to? How much of the sales cost center costs are going to be apportioned to B? All right. So, like I said previously, we first look at how much was cost center B allocated. So the allocated costs were the figure there, 32,400. Then we look at the apportionment. Now, the apportionment has to be based on a reasonable basis. All right, you don't just have to guess, you have to apportion.
Yeah.
Okay, you have to apportion on a reasonable apportionment basis. All right, now so we need to apportion both the canteen and the store's costs, which are going to be considered for B. So let's start with the canteen cost. Canteen. The canteen cost to be apportioned to sales center, production cost center B, should be based on the apportionment basis, or the fraction should be based on, because these are canteen costs. So canteen costs, normally we have to to apportion them on the basis of number of people who are eating from the canteen. So we then ask ourselves, how many employees from production cost center B are accessing the canteen? So we can generally say everybody who is working at cost center B is accessing the canteen. So how many are they? We can see that production cost center B has got 150 employees who are accessing the canteen. So the 150 becomes the numerator. And how many employees in total are at this particular firm? We can see that that's 100 from A plus 150 in B. So that comes to 250. Are you following?
Yeah.
multiplied by multiplied by 18,500. And how much do we get?
11,100.
11,100. Okay, can put this one in brackets, and then we have to consider those ones from stores. The stores, obviously we can use the number of material requisitions when we will be requesting services from the stores department. We have to write some requisitions, so the number of those requisitions can be used as the basis of apportioning the stores center costs. So that's we just do the same. So sender B raised about 104 requisitions, so that becomes our numerator, and the denominator will be the total of 60 plus 104, it becomes 164, multiplied by the total stores services sender costs, that is 8,200. So you put some bracket there, and what do you get?
5,200.
5,200. So we add up, and how much do we get?
Maybe add 11,100 plus 16,300.
And why did you ignore this, the 32,400?
Oh, okay.
Or maybe it's not visible. Are you seeing it?
I didn't see it the first time, but now I can see it.
Hey man, don't sleep that side.
48,700.
Yes, 48,700. So you can see the logic here that you just have to have an open mind. Do not be intimidated by the figures, because the figures are going to come in the exam, but you just have to calm down. You just have to, take a sip of your water and you move on. Do not panic when you face figures. This one we talked about it, okay, where we say that, direct labor costs are explained, refer to the work in progress. I'm sure you still understand that double entry thing, right?
Yeah.
Yes. So the double, the answer there should be B. Did you get that? Yes, you got it. Answer is B there. Okay, now, which of the following statements about qualities of good information is false? Qualities of good information, and I say that you just have to know this acronym accurate. And today I want you to tell me. Otherwise, I don't want you to just cry every day when you're not, you're not taking it serious. All right, what does A stand for?
Accurate.
Yes, accurate. B.
Complete.
Yes, complete. C,
Cost beneficial.
cost beneficial. Um, U,
User targeted.
user, sorry, user targeted. R,
Relevant.
yes, relevant. The information should be relevant. A,
Authoritative.
yes, authoritative, to be supported by, enough evidence, or data, evidence based, And T,
Timely.
yes, timely. And E
Ease of use.
is ease to use. So we are done. So now let us answer question number 3. Question number 3. What is the answer for 3?
C.
Remember, you need to pick that option which is false. So A is saying it should be relevant, which is true. The one is true, but it's not the answer. Hey, I don't want you guys to be confused. Okay?
Mm-hmm.
A is true, but the question wants us to pick that is false. So you need to learn to follow instructions.
Okay.
Okay? Good.
Mm-hmm.
B, it should be communicated to the right person. Yes, user targeted. C, it should be completely accurate. Oh my God. Even if we want the information to be accurate, we do not want, the information to be wastefully accurate. You understand?
Mm-hmm.
Going some extra mile in providing the information might, by the end of the day, make the information clutter and it won't be useful. So it just has to be sufficiently accurate, but not completely, that strict, accuracy is not going to be helpful. So this one, because of this wording completely, it becomes false. Becomes false. D, it should be timely. Yes, timely. That's fine. So the answer is C. So C is our answer, although it is false. But the question wants us to pick that one. That is false. So that's the answer.
Yeah.
Okay, let's move on. So were you passing? Seems like you're getting everything correct. You're coming up with flying colors. Okay. Okay, question 4. This one is troublesome, but we just want to get over it systematically. So we are going to adopt a step-by-step approach, which means whatever we thought we knew, let us just erase and start to reload the knowledge. Okay, the following ratios were calculated for a period: production volume 98%, efficiency 105. On the basis of the above ratios, is each of the following statements true or false? So in the examination, when you face this particular question, please take your time. You just have to jot down the formulas to obtain each of those ratios. So for example, the production volume is equal to standard hours. Excuse me. What's going on? That's standard hours of actual production. Remember, these ratios are all production hours ratios, okay, or production efficiency ratios, or production performance ratios. So they are related to direct labor hours. Direct labor hours. So this is why we are using hours, not units, but hours. All right, please get that in mind. So that's standard hours of actual production divided by the budgeted hours. All right, so we know that if the numerator is greater than the denominator, therefore the fraction will give us a ratio that is greater than 100%. If the numerator, that is the standard hours of actual production, is greater than the budgeted hours, then the ratio would be greater than 100%. So in this case, our ratio is less than 100%. 98% is less than 100%. So from this analysis, you can see that the budgeted hours, according to the ratio of the examiner, 98%, it simply means that the budgeted hours were higher this time around. The denominator was, according to this, the denominator was greater than the numerator. So the numerator was less than the denominator. That's the truth, right? So it simply means that standard hours of actual production was less than the budgeted. All right, so which means the numerator was less than the denominator. So we come back to the choices. Once you have done a formula and analyzed it, you then come back to the, you ask where, you just look at the statement which has got these variables, the standard hours and the budgeted hours. So which statement they got that? So statement number 3 is actually talking about our formula there. So budgeted hours were less than standard hours of production. Is this true? We can see that the budgeted hours, according to this formula, the budgeted hours were higher. Why? Because this is what, if the budgeted hours is the denominator. So the denominator, if the denominator is higher, then we get a ratio that is less than, if the denominator is higher, we get a ratio that is less than 100%. All right? If the denominator is higher than the numerator, we get a ratio that is 100%. But in this case, we are now being told that the budgeted hours, which is the denominator, will less than the numerator. If the denominator is less than the numerator, it simply means we are going to get a ratio which is greater than 100%. But according to the formula here, we obtained a ratio that is less than 100%. So in that case, this statement is false. Because if the budgeted hours are less than are less than standard hours, it simply means that we were supposed to have a production volume ratio that is above 100%. So the statement here is false. I hope you get me. I hope you are getting me, guys. So statement number 3 is out. So in the examination, because of time, if you found one of the options, if you have worked out your analysis and determined you are not confident that one of the options is false or is correct, you then have to just, use substitution, elimination by substitution. So the 3 should be under false. Remember, you've got 2 columns. You need to ensure that your answers meet the requirements of both columns. So you must expect to find the 3 under false. So our answers should either be D or A. So which means you just have to eliminate these ones which are saying statement number 3 is true. Why? Because we have determined that statement number 3 is false. So you are now left with A and D. Okay, you are left with A and D. You then have to work out again the formula for efficiency, the efficiency ratio. So efficiency is given by standard hours of actual production divided by the actual hours worked. So if the standard hours are greater than the actual hours, if the standard hours worked are greater than the actual hours worked, then it simply means that the efficiency ratio is going to be greater than 100%. The ratio will be greater than 100%. Now, we are having an efficiency ratio which is greater than 100%. So it simply means that the standard hours of actual production were greater than the actual hours worked. So statement number 2 is saying standard hours of actual production were more than actual hours. So you can see that it is explaining our assertion. So statement number 2 is true. So in the examination, where true is appearing, where statement number 2 is under true, then you just have to pick that one as your potential answer. So true is true, right? Statement number 2 is true, but also statement number 2 is also appearing here. So we are left with what? With statement number 1. Let us now try to reason and figure out what statement number 1 is saying. Okay, now for option A, you are not going to be assisted. You are not going to be assisted by any other information except your logical reasoning. So we are having this information that the PV has shown us. From the PV, the production volume has shown us that this is what it has shown us, that the standard hours, because if we are having a production volume ratio which is less than 100%, it simply means that the standard hours were, which are the numerator, were less than the denominator, which was the budgeted hours. Then the efficiency ratio has shown us that the standard hours were greater, because the standard hours are the numerator in this formula. The standard hours were greater than the actual hours. So it therefore follows that, if standard hours are less than, the standard hours are less than budgeted hours, but greater than actual hours. It means the budgeted hours were greater than the actual hours. Budgeted hours were greater than the actual hours. Why? Because we understand that the standard hours, according to the production volume, were less than the budgeted hours. However, even if they were less than the budgeted hours, they were greater than. You see, these standard hours, according to the efficiency, they were greater than the actual hours. So therefore, if we compare budgeted hours and actual hours, we can see that the budgeted hours were higher. Why? Because they are already higher than the standard hours. But these standard hours were higher than the actual hours. So therefore, the actual hours are less than the budgeted hours. So option A is saying actual hours are more than, which is wrong. They were less than. According to our analysis, the budgeted hours are higher than the actual hours. So this one again is false. So given that, it simply means that the option, the answer there is A. This is the answer. 2 only is true, but 1 and 3 are false. So option D is ruled out. Is that clear? Good. There is another production performance ratio or direct labor hours ratio, which we didn't talk about. That is the capacity utilization ratio. Capacity utilization ratio, and it comes in our examination where we have to look at the budgeted not the budgeted, but the actual hours worked, okay, divided by the budgeted hours. You want to see if we took more hours than budgeted for. All right. So we expect this ratio to be less than 100%. If we have more than 100% of this ratio, it gives. Okay, so if we get a ratio that is above, that is, let me use my pen, a ratio that is greater than 100%, it simply means that we are using more hours than budgeted, or we took more hours than budgeted. So we want like that. All right. That's the idea. However, the context matters. Okay, the context matters. Sometimes we want to ensure that maximum capacity has been utilized and so forth. So sometimes we need to ensure that even the overtime work, hours are going to be utilized and so forth. We use all the labor available to the fullest and so forth, or even exceeding its potential. But it won't be good in the longer term. All right, it won't be good in the longer term. So it is usually sustainable that this ratio should be below 100%. All right, I think I have done justice to this aspect of the syllabus. You can see it. Are you seeing it properly?
Yeah.
Which of the following statements about management accounting information is or are true? They must be stated in purely monetary terms. Is this true or false?
False.
Why are you saying it's false?
Because it's false. Because management, it's not only monetary terms, but it's just like maybe the transactions and stuff, not purely monetary terms.
Yes, yes, you're right, you're right. So that statement is false. Statement number two, limited companies must by law prepare management accounts. Is that true?
No, it's false.
Yes, there are no standards or rules that force these companies to prepare those accounts. Uh, they serve as a future planning tool and are not used as an historical record. Is that true or false?
False.
Yes, it's false. They can be both futuristic and historical. So the answer is D. Number six, which of the following personnel in an organization would not be involved in the purchase of materials? Are you passing? Are you passing?
Yes.
I don't want just to scribble past. We are not passing there. Number five, the answer was D. Yes, we are passing. Number six, which of the following personnel in an organization would not be involved in the purchase of materials?
Credit controller.
Yes, we talked about this guy last time. Greg. The credit controller is for receivables, so he won't be part of the purchasing system. Okay. Number seven. Business X hires a machine which is used in the final packaging process in its warehouse. A basic fixed monthly amount is paid, so they pay a fixed monthly amount for the machine with an additional charge for each unit, packaged. The number of units packaged varies from period to period. Which of the following is or are true about the cost of the machine hire to business X? So the cost of this machine hire should be impacted by the mixed nature of the costs. The costs are both fixed and variable. Did you get that?
Yeah.
There is a fixed monthly charge as well as an additional, that is a variable charge, isn't it? An additional charge for each unit packaged. So what is the characteristic of this cost? There is a fixed cost element, something like that, isn't it? That is, the cost in total has got this particular type where there is the fixed element. This is the fixed cost and the variable cost. Do you get it? But so this one is the cost in total. What about the cost per unit? The cost per unit, because there is a fixed cost element, the cost per unit might follow this way. They usually fall. And they tend to fall. All right? They tend to fall. That's their behavior. All right? The graph might sometimes become this way, because of the variability in production. Okay, so bearing that or having that background, we can then attempt the question. because you need to have some background. You need to understand the behavior of the cost in total and then per unit. What will happen per unit? All right. Remember, fixed cost. The fixed cost in total, the fixed cost graph in total, the cost will be constant. All right. But per
Yeah.
unit now, if we are looking at the fixed cost per unit, they tend to fall.
Okay.
All right, that is per unit. Why is it so? For example, you are paying rent $100. You are renting a shop and you are paying £100 per month. All right, when you are selling
Yeah.
10 loaves of bread per month, 10 loaves of bread per month. So what is the cost per bread? What is the cost per bread? It simply means that the cost per bread is is actually £10. That is
Yeah.
100 over 10. Okay.
Mm.
Now you have improved. Now you are now producing 50 loaves of bread per month. What is the cost per unit? It's now
What's wrong with
$2,
you?
isn't it? It's now two
Yeah.
dollars, right? But
Yeah.
rent, you are still paying the same rent. So in total, the cost, the fixed costs in total are going to be constant. You are still paying $100, $100, $100. No matter how much you are going to produce, you are still paying rent of $100. £100. But when it comes to the cost per unit, now the cost per unit, the rental cost per unit of bread manufactured, it is now $2. So the more you produce, the better. Is that clear?
Yeah.
Good. Now let's look at statement number one. The total cost per unit packaged will vary from period to period. Yeah, the cost per unit is going to vary. Why? Because there is some variability, all right, and the packaging varies from period to period. Production is varying from period to period, so the cost per unit is not going to be constant. The cost per unit is not going to be constant because of the mixed nature of fixed and variable cost. So the cost per unit is not going to be constant, please. So statement number one, this one is correct. The total cost per unit packaged will increase as the packaging activity rises. Is that true?
Uh. Yeah. No.
Is it going
No.
to increase? I said the cost per unit. Remember, the cost per unit is going to decrease. Okay, I know you'll be confused by this. The total cost per unit is different from the the total cost. Uh, what can I say? They say the cost in total is different from the total cost per unit, right? Of I know the term total cost per unit would have confused you. When I'm saying the fixed cost, I mean the graph of variable cost in total and the graph of variable cost per unit, or the graph of fixed cost in total, fixed cost per unit. We are simply saying total as in rental costs in total, not the total cost per unit. Total cost per unit simply means that when we add all the little cost components, like for example, direct materials, direct labor, variable overheads, plus, then we get the total cost per unit of those costs added up together. Right. So
Yeah.
the cost per unit should have guided you. This is the very important phrase, not this first part, the total, you would have even ignored it. It makes no sense. But the cost per unit packaged will increase as packaging activity rises. That one is false. Why? Because there is a fixed element. When there is a fixed cost element in a cost, it simply means that when you produce more, as in our example, when you produce more loaves, the cost per unit tend to decrease. Are we together?
Yeah. Yeah.
They tend to decrease. So the two there is actually false. What about statement number 3? The total cost per unit packaged will decrease as packaging activity rises. The total cost per unit packaged will decrease, and this one is actually the correct one, because that's what we are saying. When we produce more, the total costs are likely to decrease. So the correct statement there should be D. The correct options 1 and 3. Any questions? Did you get it right? Number 7. Number 7. Oh, wonderful. It seems like you were cheating.
No, I actually did it at school. I was not cheating.
You're using Chat GBT.
No.
They say if they say there is this one interview question that would determine everything. What AI tools are you using? And you say Chat GBT. That advert, it's making me wonder. It's making me wonder. Okay, number 9. Which of the following is a reason why profit for a period for a manufacturer will differ depending upon whether absorption costing or marginal costing is used? So which one of those reasons is going to explain the difference, or the reason behind the difference in profitability in situation where we are using absorption costing or marginal costing? What is going to make their profits different?
Close.
All right. What's the answer?
I thought it's C.
What?
C.
C.
Yeah.
Closing finished goods inventory higher than opening inventory. Yes, that's a correct answer, but I want you to explain why are you saying it's a correct answer?
Because I don't know, I guess.
Okay, all right. So what happens is when you are using absorption costing, AB, is it AB or AC? Absorption costing is AC, right? AC, yeah. We are saying variable cost plus fixed cost in the cost of a product. So if the cost of a product is variable cost 10 plus fixed cost 5, it simply means that this product is going to cost $15. If you are using MC, marginal costing, it's simply that we're only going to use variable cost alone, and the cost will be $10. Now, when we are now doing our trading accounts, let us say the AC is here, the FC there. All right. No, this one is not a T account. It's not a T account. Please don't think of T accounts. All right. Let's say our sales for the period were $200, and units which were sold. The units which were sold were, we sold 10 units. Let's just say 10 units sold. 10 units. Okay. Can that be? If we say 10 multiplied by 150. Okay. Fine. Yes. So 10 units. Let's say 10 multiplied by, each unit was $20. Okay. Each unit costed $20. So 10 multiplied by 20, that's 200, which is reasonable. So in terms of the sales, 200. Now, okay. Oh, is that going to work? Is that going to work? Let's just say, okay, we produced 12 units. Let us just say 12 units because we want to leave something as closing inventory, right? Good. So we only sold 10 units and we made $200 as our sales. Then cost of sales. The cost of sales is given by how much? By what? Opening stock, 8 purchases. Do you still remember that?
Yeah.
I wanted to write paper there. Oh my god. Purchases and then closing stock, right?
Mm.
So let's say the opening stock was 0. The purchases, we purchased 12 units. 12 units. At how much? The cost was $15. Right, give my figures correct. What is 12 multiplied by 15?
180.
180. Okay. Then the closing stock now, we are left with 2 units because we sold 10. So 2 multiplied by 15. That's how much?
30.
That's 30, right?
Yeah.
That's 30. Okay. So this one is deducted from the purchases and we get a certain figure there. What is 180 minus 30? That's 150, right? This is the cost of sales. Then we less this cost of sales from the 200, and what is our profit?
The what?
I mean,
50.
yeah, that it comes to 50, right? 200 minus 150, that's 50, right?
Mm.
That's the absorption costing profit. What about the marginal costing? Let us do the same. We use the same figures. We sold 10 units at 20. That's 200. And then the cost of sales. The cost of sales now, the purchases are still. The purchases are still what? Are they still 15 or they're 10?
They're 10, I think.
All right. Remember, I used the purchases there. I used purchases, but you can. I think we can use production cost, right? We can use production cost, not really purchases, but production cost, right? Because it's about producing. We are not like trading. It's not yet at trading, but it's so about manufacturing account, right? So the purchases here should actually be production. These are production costs. We're talking of production, right?
Mm-hmm.
Is that it? Good. Because the moment you say, if you're saying purchases, how can they be different from the purchases in the marginal costing? Since it will start to raise, a lot of questions, right? So it's production costs, those direct materials, direct labor, overheads and so forth. So when we are using marginal costing, only the variable costs are going to be considered. So our purchases or let me just say production ish. The production is $10 per unit multiplied by how many units? 15. Is it 15? No, 12 ish. 12 units, right?
Yeah.
12 units. So this comes to 120. And then the opening stock was 0. Okay. So opening stock plus production, we get 120, and then we deduct closing stock. Closing stock. Closing stock, that's how many units? 2 units applied by $10. So that's 20. So we come to
100.
100.
Yeah.
So what is wrong with our mathematics there? Is this what we wanted? We get 100 there. All right. One thing that could have distorted our method is that our closing inventories in terms of the quantities, they are the same. Here we are saying we were left with the 2, and here we are saying we were left with the 2. What if we were left with different inventories? Hello?
Hello.
What if, let's say, the closing stock, and in terms of quantities, is it about quantities or is about the cost of the closing inventory?
I think it's the cost. Is it?
Okay. So if the cost of closing inventory is going to be higher, we should actually get more profit, isn't it? Let me enlarge this screen of mine. I don't like it. I want more space. Okay. Let me redo. Let me redo the portion. Because the bone of contention is actually on the closing inventories. But now I'm also worried about the production cost. In the first instance there, the production cost was how much there? We said 2 multiplied by, what happened here? The production, how did you get the 180 there?
We first said 200. Oh, wait.
Where did you get the 180?
Oh my god. I think we first multiplied the cells, right, to get 200. And then we subtracted with the whatever those are closing stock. I think.
This is where you threw me overboard, right? You threw me under the bus there. You are now starting to get asleep, right? Well, this is where we lost it, right? Because um, you know, we said here the production, we produced 12, right? I mean, sorry, we produced 12 units, right? So that's 12 units multiplied by 15. Okay, this is how you got the 180. Is that it? Is it 180 if you
Yeah,
say 12?
yeah, yeah.
Okay, okay. Mm, right. And within, if we sold, okay, so that's 180. And then the closing, we say that it's just 2 multiplied by 15. All right. Okay, okay. So that should be 2 multiplied by 15. That should be 30.
30.
Okay. So 180 minus 30, that should be 150. And 150 minus 200, we obtained 50. Okay. So what is the problem? Where is the problem? Because here closing stock is higher. So if closing stock is higher, we expect to get a higher profit. How come here on the marginal costing we are getting more profit than the absorption? That is the bone of contention. All right. Let me just try here. So the production, we say 10 multiplied by, so the closing stock should be 2 multiplied by 10, which is 20. And it comes to 100. 100 minus 200, we are getting, oh my God, we are getting $100. Why is the profit so high? Man, what's going on? What's going on? Hey, reason, man, reason that side, reason. Uh-huh. I want to hear your reasoning, madam.
I don't know anything.
Okay, fine. Um, at least for the purpose of answering our question, because the question is saying where is the difference emanating from? You can see that if the closing stock here is 30, right, and the closing stock here is 20, obviously the profits are going to be different. But my question, as I said, my question is the aspect of marginal costing being higher, giving us the profit which is larger than,
Versus stock.
than absorption costing. One might argue and simply say it is just from, the aspect of higher margins, because here, from a trading perspective, the costs are so low, right? The costs are so low, we sold the same quantities, and obviously, because the costs are just $10 here, versus somebody whose costs are $15, that could be the argument. But I just have to dig deeper to say, why is it so? So you have given me another homework. That's my homework. I'm going to do that one. As I also have to do a homework on the aspect of those ratios. It's my homework. And I don't want you to enter to the exam hall without me explaining that. So that is going to be my job Tomorrow, I just have to make sure that I send you an explanation as to why. All right. But you can see, you can appreciate that if our closings, because everything in terms of quantities, everything was fine. We were using the same quantities. But because of the valuation, all right, the valuation um, is also going to be affected. But remember, when I was talking of purchases, if we had stick to the principle which I was supposed to remember initially, you raised the question as to why the purchases are going to be different. I think if we used the same values for the purchases or the production cost themselves here, we were not going to be lost. Let us just, for example, because we just want to keep everything constant, everything the same, but the closing inventory to actually prove if our formula or our assumption is correct. So let us say we used the same production costs as what as those under the variable. I mean the absorption costing method. So if we keep the same production costs, all right, and I said, remember I said I'll research further on my assumptions. So if we keep everything else constant or the same, production costs, for example, we are going to sell in this case. I mean the purchases are going to be 12 multiplied by 15. So we're going to say 180 here. If we say 180 and the closing now, the closing, why are we saying closing is 20? The closing stock is to be based, the stocks themselves are to be based on the technique which is being used in the marginal costing. We are going to use the $10. So if the closing stock is $20, everything else the same, it simply means that we are going to have a 160 here. And you can see that it is now to some extent sensible that the profit is going to be $40. And this is the real situation. Do you get it? This is the normal situation, because even in terms of comparability, the difference was too much. The difference is not really significant, but it is noticeable. So keeping everything constant, everything else constant, except closing stock, we can see that if we are having more closing stock under the variable, under the absorption costing technique, we're going to have more profit as compared to the marginal costing technique. But we just have to ensure that everything else, the sales, the production, opening stocks, they should be the same figures. And the difference should then be seen on the closing stock. So if we do that, then we are right on track. Anyway, we will talk about that again as we proceed. Maybe we'll find a similar question. And I hope on those ratios there was a similar question, isn't it? I think there was a similar question about ratios again, unless you were now guessing. You were no longer reading the questions. So we are. Do we do number 7?
Yeah. We are now on question 10.
Question number what?
10.
Oh man. So we skipped certain things, eh?
No.
Did you do number 8?
Yeah.
The management accountant compares the profitability of 2 products. Did you do that question?
No, we didn't do it. We skipped it.
The management accountant compares the profitability of two products, P and Q, and concludes that P is the best product to make. So he was comparing profitability of two products, and he then decided that, he then concluded that P was the best product to make. He writes a report to of his findings for the board of directors. This report will primarily aid management in, what is your answer?
Decision making.
Hello?
Decision making. A.
Yes, that's correct. So you are ready to write. Hey man, I'm proud of you. Number 9, which of the following? Okay, we did that one, and so the answer there was C. Okay, closing finished goods inventory higher than opening inventory. So in this case, you can see that the opening inventory was 0. So and the closing was 30. Do you get it? Hello?
Yeah. Mm-hmm.
So there is always going to be some impact in that. If the closing finished goods inventory is higher than opening inventory, we are likely going to see these disparities. Okay, let's start at number 10. The predetermined overhead absorption rate in a production cost center for a period was $14 kist per machine hour. This one is always going to come in your examination. So budgeted and overheads, budgeted and actual overheads and machine hours in the cost center for the period where, so overheads, machine hours, what was the overhead over or under absorption? So when we talk of excuse me, when you talk of absorbing overheads, we are talking of budgeting for overheads. Okay? Mm-hmm. We budget in advance. So normally we have to commit what is called an overhead absorption rate, a predetermined rate. Do you understand? And what is the formula for overhead absorption rate? That's budgeted overhead, which is $1, which is the money on top, divided by budgeted activity, which are units or hours. All right. So in this case, the overhead absorption rate was the budget 94,000. Remember, the budget $94,900 divided by the activity, machine hours, 6,500, and what do we get? What do we get is our overhead absorption rate. How much?
Do you multiply it by 100?
No need to multiply. These are dollars over
14.6.
14?
14.6.
$14 kist. Okay, so every hour we are budgeting it. That's the standard cost of an hour. Okay. Remember when we talked of the standard hours, this is now the standard cost per hour. All right. So when we want to calculate the standard hours now, or let me just say the standard cost of actual hours, or the actual hours per budget, something like that. So we then come to the actual production to see what really happened. So we then have we want to compare this actual versus the actual machine hours worked. How much was the actual cost, the standard cost of actual machine hours worked, right? Because this is now the overhead absorption rate is the standard per hour, the standard cost per hour. Now we worked how many hours? We worked 6,745 actual hours multiplied by the standard cost of $14.60. It means we have these hours have costed how much in standard hour terms?
98,477.
98,477. Yes. So, based on standard hours, we should have incurred, we should incur a cost of 98,477. This is our budget, all right? This is the budgeted cost. If I say the budgeted cost, I will again mislead you, but this is the standard hours, the standard cost of actual hours. So we need then to compare that with the actual hours. So when we are saying the standard cost of actual hours, we are simply saying the absorbed cost. All right?
Okay.
The cost which were absorbed or which were considered in terms of our budgeting, the cost which were considered were 98,477, which means if we worked 6,745 hours, we are supposed to incur cost of 98,477. However, we incurred 96,720. So you can see that in terms of our budget, we over budgeted. Do you understand? Or we over absorbed. Because the reality was that we incurred 96,720 instead of 98,477. So in this case, we over absorbed, we over budgeted. Do you get it?
Yeah.
So by how much did we over absorb the costs? What is the difference?
Oh, do we just subtract?
Yeah, you subtract.
Oh. 1,757.
Yes. So the answer is A. But in the examination, you are going to get 1,757 under absorbed, 1,557 over absorbed, and you will be confused. So you need to first, before you do any subtraction, you need to determine if generally there is an over or under absorption. There is going to be an over absorption if the budget is saying that if the standard cost of actual hours is greater than the cost of the actual hours, or is greater than the actual cost of the actual hours. Remember, these are the actual hours, isn't it? And this is the actual cost. or actual activity, actual cost versus actual activity. So if the standard cost of actual activity is greater than the actual cost of actual activity, then you have over absorbed. Then once you determine that you have over absorbed, then do your own subtraction and you get it right. Otherwise, if you simply start by, doing the subtraction and so forth, you then have to say, oh man, I've determined a negative or a positive. Then what is going on? You'll be confused. So you just have to determine you before you get the actual difference. Just comparing the figures, generally you will see that this one is larger than that one, and you see, you proceed. Oh man, oh man. Inertia has attacked me. But now, to tell you the truth, if you master the aspect of overheads, you are home and
Mm-hmm.
dry, because
Wow.
those are the things that are going to come. Those are the things. They are the real deal. All right, let's reach question 15. If I'm is
Mm.
to pay, hello.
Okay.
I know you want the tutor to continue because you're worried about him. But what is important. Hey, don't cry. What is important is to understand. I mean, to
Yes.
get the concepts. You are ready to
Yeah.
pass. Don't panic. Don't say, oh man, but we didn't finish the whole paper. Those little questions we do are very, very important.
Yeah.
Okay, a firm has to pay a 20 cents per unit royalty to the inventor of a device which it manufactures and sells. So they pay a 20 pence per unit as royalty to the inventor. How would the royalty charge be classified in the firm's accounts? I hope you're still seeing the question properly.
Yeah.
Is this a selling expense? Remember, we are paying a royalty to the inventor. For example, we are manufacturing a toy for kids. Then there is a certain intellectual property we are using in our toy, or there is a certain technology which an inventor has to be paid for. That payment is called the royalty. We pay to the inventor for their knowledge. So each toy attracts 20%, 20 cents of that royalty. So how do we treat this royalty? Is it a selling expense?
No.
Yes, that's not a selling expense because this is related to manufacturing. It's a manufacturing cost. So it's not a selling expense. So, but what exactly is the expense?
It's
Is it a
a
direct
direct,
expense? Is it
direct.
a, yes, that's a direct expense. Why is it direct? Because it can be directly traced to the product. It's not
Yeah.
a production overhead. No, overheads are indirect costs. These are indirect.
Mm-hmm.
So you can see that to pass this exam, my God, it's so easy. Yes, of course there are those ratios. Don't worry about them. I'll send an audio tomorrow morning. Uh,
Okay.
which of the following will be classed as indirect labor? Indirect labor.
Uh, B. Okay.
What?
B.
B. And why are you saying B?
Because it's indirect. It's not like directly enforced to the stage one of the labors, but it's actually maybe the processed goods, so it's indirect.
You see, one thing I don't like about you is that you are shy. You're shy to express yourself when you are almost correct, but you are shy. And you know what? Examiners love people who are shy because they will always give you 32%, 47%. They like that. You see, you're good customers for them. So I don't like that.
Okay.
Yeah. Anyway, the answer is actually B. You are correct there, but your explanation wasn't convincing. You
Okay.
see, let us do step by step. A, assembly workers in a company manufacturing television. These ones are direct labor. This one is direct labor. They are directly involved in the production.
Yeah.
Um, C, plasterers in a construction company. Yes, the plasterers are actually direct labor. They are hands-on in the production. Then a consultant in a firm of consultants. That one again is direct labor. Then this guy, stores assistant in a factory store. You see, that's where the problem is. The people, I mean, people, when they see factory, they simply say, oh, that one is a direct labor. No, that's not direct labor because a factory store is not. People in the factory store are just support staff. They are not directly involved in the manufacturing of goods and services in the factory. So, hello, this one is indirect labor. Okay, so the answer is B. Is that it?
Yes.
And if you fail, I'll cry. A manufacturing firm is very busy and overtime is being worked. How will the amount of overtime premium contained in indirect wages normally be classed?
Um, the factory overhead.
Yes, overtime premium is an indirect cost, is an overhead, unless when unless when
Um, I don't know.
here the answer is correct. You are right. You are right. But sometimes overhead premium is part of direct costs. I mean direct labor.
Okay.
But what are those circumstances? One, when when it is incurred at the insistence of a customer. Sometimes the customer comes and say, a specific customer comes and say, I want my order to be complete by Friday, please. Your people should sleep, on the machine. They should spend the whole night, weekend on the machine. So that type of, overtime is going to be part of direct labor.
Yeah.
The other thing, sometimes, sometimes the factory is going to be, busy throughout the year.
Yeah.
Hmm?
Mhm.
Throughout the year. So when the overtime becomes a regular cost, then it becomes DL, direct labor. Do you understand?
Yeah.
Yeah, because when it is now known, it is now known that you are going to work overnight. It is no longer overtime, isn't it?
Yeah. Mhm.
It becomes a normal shift, so it becomes direct labor. Do you get it?
Yes.
Better. Now, there's this question number 14. A company makes chairs and tables. Which of the following items would be treated as an indirect cost? A, wood used to make the chair. This one is direct material. Metal used for the legs of a chair, direct material. Fabric to cover the seat of a chair, direct material. The salary of the sales director of the Kaman, obviously this one is an indirect cost. It's almost like a selling cost. Do you understand?
Yeah. Mm-hmm.
Great. The last question, please. The last question. I know you're worried, but hey, if you simply give yourself time and listen to what we are saying. I'm going to send you this video today. Seems like we were a little bit awake, isn't it?
Yeah.
I'm going to send to you together with the explanation tomorrow in the morning. I'm going to do that some legal presentation on those ratios to see if we can make sense out of them, and then we call it a day on that one. We just have to close that chapter and ensure that you ended to the exam hall ready and prepared. Over which of the following is the manager of a profit center likely to have control? What is the profit center?
A profit center. I think a manager. I don't know. I think a profit center
I
is
told you I don't like that. I
a
want a person who's confident.
profit center is a place where uh, all the trading takes place and all the money is produced. Okay, let me say it this way. A profit center is a department within a company that generates its own revenue and is responsible for its own expenses. I think
It's on what?
expenses and profits.
Profits and what?
Expenses.
Yes, you're right. So this guy is responsible for the selling price, obviously, and certain controllable costs. Why are we saying controllable costs? Because uh, he made incur certain costs which are not controllable.
Mm-hmm.
Okay,
Yeah.
but he has got only control. Remember, he has control of certain things, selling prices, and controllable
Yeah.
costs. He cannot control those costs which he cannot control.
Mm-hmm.
Like, for example, head office apportioned the costs. You see, the head office itself does not sell anything. It's, to some extent, it is a cost center. All right,
Yeah. Mm-hmm.
they don't bring any money. So the cost of their electricity, of their salaries, and so forth is distributed into branches which are dotted around the globe. You understand? For example, the rent of the for the head office, your department or your branch could be instructed to pay 50,000 per month for their rent. Whether you like it or not, you have no control over that. All
Yeah.
right. So, like number two here, he doesn't have control over those apportioned head office costs because
Mm-hmm.
they're just thrown on him. All
Mm-hmm.
right.
Yeah.
Uh, capital investments in the center, capital investment in the center. This one again, he has no control because that's the control of an investment center. Is that
Mm-hmm.
clear?
Yes.
So, what is our answer?
Good.
Yes, D is the answer. Okay. For today, madam, I think we have done. I think tomorrow we need to meet as a polishing up exercise.
Yes.
Uh, we need to meet again. We do some polishing up. We complete the rest. of the questions tomorrow. I'll try to ensure that we cover some ground, and the majority of them should be answered, should be tackled, so that we just continue to have, some acrimony. Is it acrimony or some good relationship as we proceed? Because madam. Oh my God. It's okay, man. So much. Thank you so much. Huh?
Thank you,
So see
guys.
you tomorrow. I'll try to ensure that this video comes to you, and you just jot it down. And like I say, I promise I'll do some, research on certain things which we discussed, and yeah, we then proceed. But the aspect of that absorption costing, marginal costing, I'm sure we cleared it. We just have to ensure that we keep everything else, constant, and then we then have to consider the closing stocks. You understand?
Yeah,
And then we make our judgment. And please remember that when the opening stock is lower than the closing stock, we are likely to have, a larger profit by the end of the day.
yeah.
Okay, madam. See you. Good night. Bye.
Thank you. Bye.